Hey traders and investors. So I just want to do an update and show where we are, what's going on, and go from there. So equities are a little bit mixed depending on the index. Overall, no volume, no real volatility. But when we look at the SP 500, we've been talking about how it's been in this sideways range for a while, just oscillating through here. A few days ago, we saw it get oversold. We saw panic selling on our indicator. We talked about how that felt and looked like a washout low, and then we had a very strong rally back. And right now, there's a lot of fear in the market still. Naturally, people keep selling. Every time it gets up here, we keep seeing some high volume selling. So somebody is distributing shares, unloading their portfolios and driving it back down. But overall, it got to the lower end of the range again on Friday. I talked about this in pre-market that if the market starts to climb up and holds up fairly well in late afternoon, we're probably going to see a strong run up and short squeeze. And that's kind of what we saw. We saw a very strong move into the closing bell or in the afternoon. We're back up at the upper end of the range. And overall, the market is primed and ready to pop and really take off to the upside. If we get some traction here, we could see a very big expansion move to the upside, which is pretty exciting. If we take a look over at, let's take a look at the NASDAQ futures. NASDAQ's been underperforming a little bit. Overall, it has been dipping down in this lime green territory, telling us, hey, the market is more or less short-term oversold. Bargain hunters keep stepping in, but it is kind of stuck in this little basing, this bottoming formation, but very close to popping and starting to run up to the recent highs and then potentially exploding up a whole lot higher if the market gets some traction. So the market is ready to go. Even if we take a look over at gold, gold's been pulling back and having a little bit of a pause. Actually, today and the last trading session, we've dipped into these lime green oversold territories, saying, hey, gold's actually had a long enough pause. It's actually in a short-term buying zone where people might want to buy into it. It's undervalued, fair value at this point based on volatility, based on the price pattern that buyers generally step in when we start to get to this level. So I think this coming week could be very exciting in terms of price action, hopefully exciting to the upside for all of our positions. Now, if we take a look at kind of the big picture here, let's go take a look over at, again, I believe we're in this stage 3 topping phase. Big tech, Magnificent 7, AI, whatever you want to call it, has been dragging the indexes to new highs, but the majority of stocks are still struggling and trying to get some traction here. In the grand scheme of things, if we go and look at our big picture analysis as an investor, I put this blue box over here back. This is 2021, early 2022. This type of market scenario in terms of the underlying technicals, momentum, all kinds of things is very similar to where we are right now, where we're in this phase that it still might want to go higher, but it's definitely going to be a struggle here. Last time we got into this, we saw the stock market pull back 27%. It took 106 bars. This is the weekly chart. So over 2 years to recover. So no gains for 2 years. And then finally just started moving up again. So again, this is what we avoid with our strategies. We're able to continuously pull money out of the market, no matter which way it goes, which is why we're all here. Anyway, so that's the big picture, knowing I think the end is getting closer and closer, but keep in mind, each one of these bars is a week. So the markets may still go higher and sideways and put in a top here could last several more months of volatility as we go into elections. There's all kinds of things at play that could keep things volatile and trying to grind higher. If we take a look at gold-wise, September, we tend to see gold squeeze up a little bit, have a bit of a pullback, but a very strong month for September, more or less over the next month is fairly strong push up in the beginning of October for gold. And if we look at the big picture of gold, there's a couple different targets here. Based on the low in 2015 and the rally up, this bull flag pattern and pullback, it's giving us about a 2650 target. The big multi-year super cycle bull flag pattern is giving us a 2700 target. So we definitely have some more room to push higher here with gold. Seasonality wise, we are in favor for stronger gold. The last time we had a big multi-year pause and squeeze higher in gold was over here, a multi-year pause and a squeeze higher just before the 2008 market correction. So I believe gold is going to get here. I also believe gold is going to have a big pullback. Could be to 2200, could be back to 2000. I don't know. But I do believe there's still some upside on the short term, not much, but a lot more downside potential to reset for what will be a flush out and a financial reset across many asset classes. And then we go into a huge run in precious metals and all that. So that's kind of that view from that standpoint. One other thing just to mention here, Toronto Money Show is September 13th, 14th. I am there with Ashley for the 2 days. We have a booth there. Everyone at the show gets a copy of our book as they walk in. We do book signings. We can talk markets. I'm doing a presentation Friday, which let's just see here. Friday, let me go over here. Friday, the September 13th at 2:20, I'm doing a presentation talking about asset revesting, what's going on from a fairly high level. And then on Saturday, I will be running a workshop, which they haven't actually updated any of this info yet. They're about to do that. We're going to talk about stocks, bonds, commodities. We're going to talk about real estate. We're going to talk about the economy, major cycles at play, things breaking down, big picture of what's going on. So anybody who has any of those assets has a good view of that. So that'll be a workshop, 45 minutes. And then, of course, we got a meet and greet after both of these presentations to hang out, talk, and all of that stuff. So if you're in Toronto, make sure you come to the show. Love to see you guys there and go from there. Anyway, let's take a look over at bonds real quick. Bonds are down a little bit today, down 1/3%, pulling back, which I do believe is a good thing. We actually see on our momentum chart here, we've got a sell short telling us bonds short term have gone into a short-term downtrend, which makes sense. We have a long signal in the stock market. It looks strong. Bonds generally go the other way when we're in a normal type of historical 40-year trends. And finally, bonds and stocks, I think, are falling back into the norm, which we can actually see from our CGS strategy, which is when stocks move up, we have a buy signal, bonds generally go sideways. When the stock market starts to go down, we see bonds go up and move higher. And of course, now we've got stocks pointing to higher pricing and bonds are likely to flatline and struggle. So when the stock market, even if the stock market goes up, but it's out of favor, we actually tend to see bonds actually perform well also. All these things are very important. If we go back in time, let me just scrunch it down. If you go back in time and look how bonds have performed in the past, which we haven't been trading because they're out of favor, whenever bonds should be a buy for investors, we see the price of bonds actually go down, dramatically down, or flat, or a very tiny gain over and over again. It's just not a good investment. But now we are back into the phase where they become favorable, that we have turned a pretty major corner in terms of the stock market. So pretty exciting stuff. When we look at the SP 500, this is our sentiment chart. Telling us the strength of the overall market. We talked about this last week. The market, the last time we had a correction, was a healthy correction. A lot of nervousness, some panic selling and fear at the bottom, these deep red bars. That is a bullish sign, means we can go a whole lot higher. But recently we saw a huge amount of red. And this is like a giant open wound for the market, a big gash. Damage was done here. We've lost some momentum. And definitely going to see how this goes. But in the short term, we're starting to firm up. We got a big, powerful momentum bull flag. And sometimes we get some of the strongest pops and rallies just near the end of a bull market. Just like some of the biggest drops happen in the last couple days or weeks of a bear market. So just because we're close to a top doesn't mean the top is in just yet. So we have potential here for higher pricing. NASDAQ building up a new launch pad, getting ready to take off as well. And in the grand scheme of things, if we take a look at the hot list, we've got positions here. IYR looking very strong, pushing up at some nice strong highs. We've got industrials, which, as we know, industrials do very well this time of year or this phase of the stock market. That's why the Dow Jones is hitting new all-time highs, the Dow Jones Industrial. We like the industrial sector, which is pushing up nicely. GDX, they're taking a bit of the back seat right now, taking a pause, but this is a bullish chart pattern, and there is potential here for this to have another very nice leg to the upside. And of course, we know all that from our analysis here when we go down and look at the stock market cycles and the economic cycle. Precious metals like gold do well. Energy stocks have been trading up near all-time highs for a very long time. When you look at the weekly chart, they're up in the upper range where they have been many, many years ago and many years before that. Energy stocks are just highly priced, just like gold, and industrials are hitting new all-time highs. And whenever these things come together, that's usually sign warning us the market is putting in a top. Not only that, but we see the yellow economic cycle slowly coming to an end as well, with rates, I think, are going to start going down. That is not a good sign. The Fed is looking pretty bearish. We got unemployment starting to rise. Home prices, well, a lot of people don't see it. If you start looking into real estate, holy crap, real estate market is super weak and it's about to fall off a cliff. It's just, all kinds of places. It's not just my town where there used to be like 50 or 60 homes for sale. Now there's 600. I was looking all kinds of places across Florida and everywhere. There used to be a very small handful of homes, like 50 or 100 homes, and now they all have like 800 or 1,000 homes for sale, and nothing's actually selling. And so people keep lowering the prices and they're still not selling. So there is going to be a huge reset, which is amazing opportunity for us as investors who know how to handle money, who know how to manage risk, who understand these cycles, where we can get into place. Once the damage is done, we can pick up investments that we like, that we know. And you should only ever invest in stuff that you know. You don't have to be diversified across all kinds of stuff. You do what you know, what you love, and if you know it and you love it, then you should be able to navigate it very well. It's not about having all kinds of random stuff. Everything I own is stuff that I'm passionate about, I believe in, and I understand the cycles, and I take advantage of it. I don't care about other crazy things people are making a fortune with. It sounds great, but I'll do it my way, and everybody should do it their way. If you're not interested in an asset class, don't touch it. Other than that, that is about it. I think we'll go from here. Again, I'll try to update throughout the week. I will be gone for the week. I'm going on a amazing dune buggy adventure. I rented a massive dune buggy, turbocharged, to go through 600 acres of desert and canyon. So that is going to be pretty awesome, and a whole bunch of other cool stuff. But have a good day, and talk to you guys soon. Bye-bye.